All right, what the heck just happened to the stock of Gap Inc. that sent its stock plummeting after our trading? Look, after the close, the agglomeration retail chain reported what was actually a solid quarter, slightly better than expected revenue, healthy same-store sales, decent earnings beat. So far, so good. Sure, except Gap merely reiterated its full-year forecast, and more disconcerting, management said that forecast does not include the impact of the tariffs. When you throw in the tariffs, that could cut the company's operating income by up to $150 million if they stay in place all year. And that's why the stock's getting hit. But I actually think the most salient issue is that the stock had shot up 65% from its April lows. Very few stocks can keep rallying after that kind of move. We may have some opportunity here. So let's take a closer look at Richard Dickson, President and CEO of Gap Inc., find out more. Mr. Dickson, welcome back to Mad Money.
Thank you, Jim. It's always good to be back.
Well, Richard, I know that it is difficult when you see a stock down for our people at home, but the fact is you had some unbelievable numbers here. Gap +5. You have Old Navy, 9th consecutive quarter of consistent market share gains, and you had a nice same-store sales there. And most impressively for me is this operating income dollar growth, which is extraordinary. And I've got to tell you, I think those are being buried by people who are saying, why isn't the stock at 31 right now? So I'm going to give you the floor to talk about the actual progress that you're making that's continuing, because it's impressive.
Jim, thank you so much, and we appreciate that because we really did have a really strong first quarter. As you noted, we exceeded expectations across key financial metrics again, and it really is due to our strategic priority. I mean, we've been really clear. Despite a dynamic environment, we're staying firmly on course, and it's showing up in our results. Comp sales up 2%. That's the 5th consecutive quarter of positive comps. We also gained market share, as you noted, for the 9th consecutive quarter. We expanded gross margin and operating margin during the quarter, and we increased EPS by 24%. We continue to strengthen our balance sheet. We've got strong cash balances now, $2.2 billion. This is another proof point that our strategy is working. We remain optimistic, yet realistic about the opportunities ahead, and we're navigating it in a highly dynamic environment. But I can tell you, I'm really very pleased with the quarter and ultimately optimistic about, what's ahead.
I think you should be. We do have to talk about something I was discussing with my colleague, Ben Stoto's research director. How do you be you? How do you wake up and figure out whether you're going to pay 46% or 10% or 30%? Is it a $250 million hit? Is it a $10 million hit? How are you able to manage a company not knowing of any way that it's out of your ability? What do you do when it's just totally out of your ability?
Look, it's like any business, Jim. I mean, we're all constantly navigating some form of complexity, and in this case, it's tariffs. And it's our responsibility to do so without ever compromising the long-term integrity of our strategy, and most importantly, the customer value proposition. Now, as we noted, and we've talked about it, we've already mitigated over half of the anticipated impact of tariffs. We've done it through adjustments in sourcing, manufacturing, assortments, and we remain absolutely committed to achieving additional mitigation over time. We diversified our sourcing footprint. I mean, the last time we chatted, Jim, I told you, China was less than 10% of our sourcing. Today, I'm telling you, it's less than 3%. By the end of this year, it's less than 3%. And and there will be no other country in 2026 by the time we get there that will be more than 25%. So all in all, we're really navigating with transparency, but first and foremost, making sure that the customer value proposition and the integrity of our long-term approach remains. And we'll do so with executional excellence.
Okay, so a brand that I love and shop at frequently, as does my staff, Banana Republic was not what I thought you would do, particularly because I think the look's actually great. But I want to know why. What do you think happened there that it didn't continue the trajectory?
Look, I'm actually very encouraged by the ongoing progress that we're making in Banana Republic. We've been focusing on reestablishing the brand, fixing the fundamentals. There's a lot of really good new proof points emerging as we delivered a flat comp in the quarter. Underneath the hood, we see great momentum, leaning into classics, more precise assortments. The fit that we've been working on over time is really starting to resonate as we rebuild trust with our customers. As you know, our men's collection is continuing to perform really well, and we're pleased with the improving performance in women's. Our team is doing a great job strategically redeploying marketing to a much more culturally relevant storytelling proposition It's resonating. I hope you saw we had a great collaboration with White Lotus. Right. It's a real testament to the clarity of our positioning as a modern explorer brand. It was inspired, of course, by the world of White Lotus, but it was distinctly Banana Republic. And I'm telling you, I remain very optimistic about the brand. We continue to strengthening the foundation and product. And with each passing quarter, we're seeing clearer signs of brand progress.
All right, so I put it all together. The mitigation, which can be done over a year, the fact that Banana Republic just told me not to worry, the amazing numbers that I'm seeing from Gap, really solid market share take Old Navy. And I say to myself, with that balance sheet, and the balance sheet's much stronger than I can ever recall Gap having, with that buyback, I have to believe that if people don't believe, you can believe, and you can put that buyback to work at great prices and pick up some stock for Gap, for shareholders.
Look, we believe in us, and again, you mentioned Old Navy. Old Navy is our largest brand. It delivered another consistent, strong quarter of comps, up 3%. It's the 9th consecutive quarter of market share gains. We're winning in categories that we called out strategically well-intended: active, denim, dresses. I mean, these are really important endeavors that we did what we said we were going to do, and we're going to continue to do that. We've established Old Navy in a way that really proves the momentum is there for our largest brand, and it's giving us confidence as we move into 2025. Collectively, we've got a strong portfolio of brands that matter, and we're proving that they can matter more. Now, it's a long-term proposition, good quarter, but, lots of excitement ahead.
Okay, so people will get up and they'll look and they'll say, well, wait a second, the stock's down 5. Did he take his eye off the ball? I think that maybe there was maybe another way to put what could happen with the future. I don't know how to do it. But I think people were kind of saying, well, look, maybe they're throwing their hands up, but you obviously are not throwing your hands up.
Not at all. I think on our outlook, when we share essentially, how we position this, I think it's important to recognize our goal, first and foremost, is transparency.
Right.
We were very purposeful in separating the outlook from the estimated tariff impact. We believe that our outlook is providing a perspective of the underlying health of our business, which is working and working well. It's an estimate of the impact of current tariffs, which, by the way, could still change as of last night's latest news. So it's a really important dynamic to recognize that we called it out. We're being very transparent about what that number is. We've also suggested we've mitigated more than half of that impact. We have every goal and means to continue to do so, but not at the risk of the long-term strategic approach to the business. The first half of 2025 should be largely unimpacted by current tariffs. There's nothing in Q1 and minimal impact in our Q2 outlook. The estimated tariff that we provided today is primarily weighted to the second half. Right. And look, there's going to be a lot more information to come. There's another milestone on July 9th, and we'll continue to update as we move forward. Okay. But ultimately, the underlying health of our business is strong.
I think you told it accurately, completely, and I'm glad our people get a chance to be able to buy down here because it's definitely right. Richard Dickson, Gap Inc., President and CEO. Richard, good job. Thank you.
Thank you, Jim. I appreciate it.
Bad Money's back in.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next.